I don't know if you guys have heard, but Black Knight has published some amazing data on home prices for the month of March. And I couldn't do this without the one and only Lance Lambert. How you doing, sir?
Doing great. Really good.
Housing, housing, housing. That's what you do. That's why I follow you on Twitter. You're a wonderful follow. You've got some great data from Black Knight. What do they have to say? And you can share the screen if you'd like.
Yeah, I'll go and share the screen. And okay, I got a good amount of data here. I'll go through some of these older tweets real quick.
Sure.
So I tweeted this out yesterday. In February, 79 of the country's 100 largest housing markets were month over month positive for
Okay.
February. And this isn't unadjusted, this is seasonally adjusted. So
Okay.
seasonally adjusted and unadjusted up 79 of 100, which is really a dramatic shift because 5 months ago from now, or 5 months ago, 96 of the 100 markets were down month over month,
Mm-hmm.
just
I
5 months
remember.
ago. So huge shift. And then this month, 93 of the 100 largest markets, month over month positive. That's
Wow.
a huge shift for just a 5 month period. And actually, I misspoke. 5 months ago, 92 of the 100 were down. And so here's
That's quite a flip in 5 months. You've gone from
yeah.
92 down to 93 up. Wow, that's
Keep
amazing.
your, keep your eyes on California here.
Okay.
There. See
Oh,
it? Yeah.
wow.
That was so the West Coast saw its shift finally in this one. Uh, we
Interesting.
still have a little bit of weakness in the Mountain West. And then the biggest decline is Austin. And Austin is a market that has had real speculation um, on the investor side. Prices were going up so fast for so long in that market. And they also had this thing going around where people knew that Austin didn't bust during the 2000s housing bust. They only went down like 2 or 3% peak to trough.
Mhm.
During,
Yeah, Texas in general did because they didn't allow the stupid loans.
exactly. And so there was this false belief that home prices only really went up
It
there.
can't happen. Texas is immune to stupidity. No,
And
that's
I
not true.
talked to one agent who said a lot of the investors he's dealt with in that market were buying properties that they knew they would lose money on each month, but they thought
Oh,
appreciation because prices were going up so fast that that's where they were going to cash in. And so that's really changed a lot of, in that market, some of this inventory that's went on is inventory that's being sold without an unlocked buyer. And so what I mean by that is a lot of markets, when somebody sells, they then go buy, right? So active
correct.
listings right now could start to go up and the market could get hotter, even
Correct.
as because they're selling their home, but they're going out and buying a new one anyway.
Mhm.
That market, some of this inventory is actually people just exiting. They're like, I have too many properties, or some of these bigger firms that got too many and selling off. But then this agent also said there are parts of Austin, especially on the upper end,
Mhm.
where prices haven't gone down at all. So it's a very different market. And more of the price declines in in Austin have been on the lower half, which is it's just it's an anomaly of the country right now, Austin.
Well, it's really weird because I've been doing this a long time, and if you compare Austin and Phoenix, I'm gonna guess they're acting different because they were inflated by different participants. My opinion on Phoenix, again, as a guy that's never invested there, is they were dominated by iBuyers. Once one went there, they all went there. They were dominating. Again, I think I've shared this with you. I had a very large wholesaler team who's a good friend of mine. They would lock up properties, and then they would call up the three iBuyers, and they would laugh at the prices these guys were paying. So they were the fish, at the poker table. And I think Austin didn't really get inflated by iBuyers, but got inflated by the rookie Airbnb, the new investor who doesn't understand what an alligator is. And and the reason this is important is I think Phoenix bottoms first because once the iBuyers decide to leave, they exit in mass, where Austin's going to limp along for months, if quarters or years, because an alligator is painful to individuals very differently. So it wouldn't shock me if Phoenix and Austin act differently on
So
those two things.
so here's the active listings for Phoenix.
Okay.
We have no bottom for inventory in Phoenix. It's still moving down. And that's with inventory, it's not always about like the number, it's about the trajectory. So you look
Correct.
over here at 2022, that's a big slope. That's a shifted market, right? You look here, I mean, this slope is still going down.
Yep.
So it's in what month? I mean, this is April. So
Yeah.
that's interesting. Now let's look at Austin.
Okay.
Um, Austin's inventory bottomed
Oof. So you
January.
have this is
February.
this is my reading on this, and it could be absolutely wrong. Again, Phoenix, the big buyers out at the same time, lots of listings. So it peaks last year and now comes down because they're not buying. Austin, that screams individual landlord giving up at different times. That's what it screams to me anyway.
Hmm. And then appreciation for March, and March is always one of the biggest months for appreciation.
Oh, okay.
January, December are the softest.
Yeah.
February is a transitional month, and then March, April are the hottest
Okay.
transitional months, and then June is usually still fairly strong too, and
Okay.
July as well. So we've kind of gotten up to what's probably around the peak month over month appreciations, which these are pretty strong. I mean,
Yeah,
1%.
1% a month. Wow.
Yeah. I mean, you don't really want to annualize that out to 12 because it is a March month, but
Okay.
it's strong. And then you definitely have some weakness in Texas still, the Mountain West, and then California has just done its transition. And whenever you go from you're down a month to up, it's that next month that's actually the most important because that
Okay.
1 month gets blurred in the averages. So like
Wow.
Schiller just went from down January up February, but now this March one could be up big.
Okay.
Usually once you do that transition, and same thing when we went from up to down last year, that
Right.
first one is usually kind of blurred because the averages. So
Okay.
I would actually expect some of these California ones to be much bluer for April, would be my guess.
Interesting.
And
Okay.
then down from peaks in February, 25, and I have it here. In February, 25 of the 100 largest markets tracked by Black Knight were back to or above their peak. So 75 were under their peak.
Okay.
This March, now 47 of the 100 largest are either back to or set a new all-time high for price.
Wow. That's peak. 47% are at or above peak of last.
Yeah,
That's, I
yeah,
did
and
not expect that.
pretty much most of this blue in here is just set a new all-time high, and kind of like and all of this too. These a lot of all-time highs here. And you would expect that number to go up next month, and that over half of the country for the 100 largest markets are back to or above their peak.
Yeah.
Interesting. Considering 25 just in February.
Hmm.
And I would need to see what the number was for January, but I would guess that we didn't go much lower than 25. I think at least
Okay.
a quarter of the markets have not fallen under their peaks on a seasonally adjusted basis. If you don't seasonally adjust, see, one of the problems that some of the very bearish people made last year, especially people on like some of these chat groups and stuff, is that they were looking at unadjusted data month
Correct.
to month, and especially doing like median sales price. Every year, median sales price goes down. So if you're not
I tried to tell them, Lance, they don't want to hear it.
so if you're not seasonally adjusted or using like a price index that also seasonally adjusts,
Yeah.
you're not going to know if there's a something to it. Every year, you're going to
Exactly.
think that prices are falling. But what was interesting is that the last fall, the second half of the year, was the first time in 10 years that we did have drops off of seasonally adjusted.
True.
I mean, Schiller seasonally adjusted went up 120 consecutive months from the bottom of the crash to June 2022, and then it went down 7 straight, and now we're up 1. So it'd be interesting now to see if are we making a new streak? Is this the start of a new one, or is it going to be,
Copy. Yeah.
a little bumpy here? I have seen some optimal blue data come in that's starting to suggest that the appreciation this spring is going to run out earlier than a normal year, which makes a lot of sense. I mean,
Sure.
you saw mortgage rates move up,
Yeah.
triple almost. And so even the fact that the market has stabilized this year is significant considering where we were just, I mean, 5 months ago, 92 of the 100 largest markets dropping on a seasonally adjusted basis.
I agree.
And another thing is some other people were making mistakes by annualizing the drops. So we had a Case-Shiller drop that was 1 month, almost 1%.
Mhm.
Annualize that out, that's like a 15%, 16% drop. And they were annualizing it, just drawing it out. And
Yeah.
then we ended up just 3% down because the Schiller only had 2 big drops, and then the other 5 were like very small drops in there. But this is the pricing data. We've seen a shift here where the spring came out, we stabilized, and price growth returned in 90% of the country so far.
That's awesome. Again, everything is housing. Please follow him at News Lambert on Twitter. And the next video, we'll be talking about inventory because that is important. Thanks, buddy.